Realty Income stock, ticker symbol O. Is this the best monthly dividend REIT to buy right now? O stock is down almost 5% year to date, while the S&P 500 is down 18%, so that's quite interesting. And what about the dividends? Realty Income is loved among the investor because of the monthly dividends, and next to that, they increased the dividends for 25 years in a row. But does this mean that Realty Income stock is a buy? In this video I'm going to show you real quickly what Realty Income does, the historical returns, the fundamental analysis, dividends, some competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Realty Income do? Realty Income owns roughly 11,400 properties, most of which are freestanding, single-tenant, triple net leased retail properties. If we check the latest investor presentation from August, we see a few interesting things. Realty Income is a S&P 500 company and one of the 64 companies in the Dividend Aristocrats Index because of the 25 year of dividend increases. Next to that, they are a top 10 global REIT and have a 15% compound annual growth rate in shareholder return since 1994. Dividends are compounding at 4.4% since 1994, and there were 160 dividend increases, so big numbers here. They aim to be a top 5 global REIT and to have an average double-digit shareholder return. When we zoom in the portfolio breakdown, we see that there are some big names included in the portfolio, such as Walgreens, FedEx, Walmart, AMC, Home Depot and Kroger to name a few. If we check the industry breakdown, we see that grocery stores is the biggest industry, representing 10.5%. Convenience stores represents 9.2% and dollar stores represents 7.4%. The property breakdown shows us that retail is the main focus with 84% in share. Industrial is 14% and other is at 1%. To be honest, I would love to see some higher numbers for the industrial segment and lower numbers for the retail segment. The average lease term is 8.8 years and roughly 15% of the lease terms expires before 2025, while 48% expires after 2031, so this looks quite good. If we check the earnings, we see that FFO per share increased 15.9% year over year to $1.02. And the AFFO increased 10% year over year to $0.97. This easily covers the dividends of the upcoming quarter. Since Realty Income pays a monthly dividend, we need to multiply the latest amount times 3. So that's $0.75. And the FFO and AFFO are around $1, meaning 75% payout ratio, which is pretty common for a REIT. And this also comforts me a lot. We also see that FFO and AFFO are growing quite nice and steady year over year. Another important number is the occupancy rate, especially with the high focus on retail, but it's sitting at 98%, which is fine by me. And now that we know more about Realty Income, it's time to check the historical returns to see what happened there. I decided to include the S&P 500 as a benchmark, and also SPG and Kim as their major competitors. On a 5-year chart, we see that the S&P 500 outperformed all stocks in this list by quite a margin. And it's no wonder why. During the lockdown periods, retail was hit hard, and so are the REITs that had a focus on retail. Realty Income had a 47 to almost 48% return including dividends, while the S&P 500 returned 73%. SPG had a minus 19% return and Kim had a 33% return. So as I just said, the S&P 500 did outperform all these stocks, but Realty Income did the best out of the 3 REITs, including in this list. On a 1-year chart it becomes quite interesting. Realty Income had a 1% return while the S&P 500 is at minus 12.5% return. SPG is at minus 21% and Kim is nearly flat with minus 0.68%. So Realty Income did return the most in this case. On the 6-month chart, Realty Income returned 3.5%, while the S&P 500 is at minus 9%. SPG is at minus 24% and Kim is at minus 8%. So again, Realty Income did return the most here. On a 1-month chart, we see that Realty Income returned a minus 6.5%, while the S&P 500 is at minus 5.5%. SPG is at minus 5% and Kim is nearly flat. Overall, it's quite interesting to see that Realty Income underperformed the S&P 500 big time, but it did way better than the major competitors. But does this mean that Realty Income is a buy? Let's find out by checking the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. Realty Income is a 14 billion market cap company and also one of the larger REITs. PE ratio is at 72, which would mean that it's overvalued. But since Realty Income is a REIT, I don't want to focus on this number and use the price to FFO instead to see its valuation. Then we see that it's at 19.46, which means it's around the fair valuation. Later in this video I will give you my 3 price targets, so make sure to watch until the end. The trailing 12-month revenue is at 2.79 billion. And in this graph we see that revenue went up quite nice and steady, with a big spike in the past couple of quarters. Profit margin is at 20%, which is very interesting, since gross profit margin is at 93%. So although it's above my 10% minimum, I don't like the profit margin at 20% for this type of REIT. On top of that, it's also lower than the 5-year average, so definitely keep an eye on this number. The next number are lower in general for REITs, so I don't mind that much being below 10% minimum. Return on assets is at 3.1%, return on equity is at 2.5%, and the most important number here, return on invested capital, is at 5.4%, which is quite good, especially since it's higher than the 5-year average, so I do like that a lot. Another thing that's typical for REITs is the higher debt versus other companies. On top of that, Realty Income has a high focus on retail, which was hit hard, which might have a big influence as well. So right now debt is at 16 billion and cash is at only 173 million. Operating cash flow is at 2 billion, meaning they can't pay down a big chunk of the total debt. As I told a second ago, it's very common for REITs to have higher debt since this is used to grow the business. I don't like the debt to cash ratio for now, so definitely keep an eye on this number. You want this to become healthier over a longer period of time. So it's very important that free cash flow is growing, since this is used to pay down debt, but also to buy back shares, do acquisitions and all other things. And here we see that free cash flow is growing quite nice and steady over a longer period of time, with again a big spike in 2022, so this comforts me a lot. Next up are the dividends, which is one of the reasons why Realty Income is loved among the investors. Dividend yield is at 4.38%, which is pretty high. On top of that, Realty Income pays a monthly dividend instead of a quarterly dividend, so you'll receive 25 cents each month per share. Payout ratio isn't correct displayed here, since REITs use FFO to calculate the payout ratio. The FFO is at $1.02, and with the quarterly dividend sitting at $0.75, we get a payout ratio of 75%, which is around the average for a REIT. So this looks quite good to me. The 5-year growth is at 3.89%, which isn't that high. But with the dividend yield sitting at 4.38%, I don't blame them. On top of that, Realty Income increased the dividends for 25 years in a row, which is quite impressive. Overall, a great dividend stock to me. Next up are the fundamentals of Realty Income versus the major competitors. I decided to include Simon Property Group, ticker symbol SPG, and Kimco Realty Corp, ticker symbol KIM. Realty Income is the biggest company in terms of market cap. Realty Income has the highest revenue growth year over year and also the highest 3 and 5-year revenue compound annual growth rate. Kim has the highest net income compound annual growth rate, but Realty Income has the highest free cash flow compound annual growth rate. So to me, Realty Income is definitely the winner here. Realty Income also has the highest gross profit margin, but the lowest net income margin. SPG has the highest return on equity and also the highest return on total capital. So to me, SPG is the winner here. All companies have a lot of debt compared to the cash position, which is very common for REITs. But Kim has the most healthiest ratio here, so they are the winner. And the last part are the dividends. SPG has the highest dividend yield with 6.9%. Realty Income has the highest dividend growth rate and also the most consecutive years of dividend growth. So to me, they are the winner here. Overall, I think Realty Income did very well and in most cases was a better choice than the competitors in this list. But does this mean that Realty Income stock is a buy at current valuation? Let's find out what the low, mid and high price targets are for Realty Income using the Everything Money software, which is one of the best tools out there. I need to fill in a few key numbers based on a low, mid and high assumption, starting off with revenue growth. I expect that revenue will slow down a little bit, since it will be harder to grow the business in high amounts. On top of that, the peak after the lockdown periods will slow down as well. So I'm filling in 10, 11 and 12%. For the profit margin, I'm filling in 20, 22.5 and 25%, since these are the average of the past couple of years. Free cash flow margin is the same story, so I'm filling in 60, 65 and 70%. PE ratio is not that useful with a REIT, so I'm filling in just 20, which is significantly lower than the current number of 72. Price to free cash flow is at 20 right now, so I'm filling in 18, 19 and 20, since I don't want to overpay for this company. My desired annual return is 15%, since I want a higher margin of safety with this stock, and I can get an easy 10% average return with owning an ETF. Right now, Realty Income is at $67 a share as of recording this video. I hit analyze and we see only one green number. But first of all, I will ignore the multiple earnings value, since Realty Income is a REIT and this is highly influenced by the PE ratio. So I'm focusing on the discounted cash flow value. We have a low price target of $54 a share, a mid price target of $65 a share, which is around the current valuation, and we have a high price target of $77. So if you believe these high numbers, then Realty Income is a buy. To me, the mid to high price target might be the most justified here, which means a $65 to $77 a share. My final conclusion on this stock is that I really like a monthly dividend income. But this doesn't mean to buy the stock. To me, Realty Income is around its fair valuation right now with the numbers that we analyzed. We have some potential in value, but to be honest, I'm waiting for the stock to drop a little bit more, so I can buy at lower prices. Right now, Realty Income is a small position in my portfolio, and whenever the price drops, I might buy some new shares. So for now, I'm just waiting. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.